Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Hello and welcome to Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, with me, Mangalam, as well as Rima. Hey guys, good morning.
Good morning. So yesterday was what? A pause for breath?
Yeah.
And today looks like, maybe we'll do a little better than what we did yesterday, at least on the frontline indices. And apart from all of that, everyone's watching out for the Edgbaston test that happens sometime during this week. The good news is that Jasprit Bumrah is likely to play for that test.
Yes.
Nigel, waiting for the boys in white?
Well, that's right. Hoping that the boys in white, they come up trumps because they fought hard in the first test and it's a young side, so we bet on them. But, in terms of the market action yesterday, it seemed to be one of those sessions in the, in the 5-day test match where you take a bit of a break, not too bad, catch up on some rest and then move on, I think. So I think the markets will be prepared to move on.
Yes, and we speak about the 5-day test. Again, on day 2 of the test, it looks like a good batting pitch. Why do I say that once again? Because, there was good close on Wall Street yet again. S&P 500 continued to hold on to its record highs. In fact, added a little to that, 0.5% higher, 0.6% higher for the Dow Jones. And the Nasdaq as well ended about 0.5% higher as well. A large part of the gains was largely because, Canada decided to roll back on its digital taxes. The news came yesterday in the market hours for India itself, but the US markets reacted to that. We speak about recovery on the Wall Street. The second quarter that ended yesterday, 11% higher for S&P 500 and 18% higher for the Nasdaq. And add to all of this, the US bond yields actually saw a bit of a dip as well. Why is that? Because one, the street's still awaiting some clarity on Donald Trump's spending bill. And secondly, Goldman Sachs has gone ahead and preponed their first rate cut target from December to September. So all of that has meant that the bond yields saw a slight smidge towards 4.23 as against 4.28 that we saw yesterday. The previous trading session that was. Meta, those shares hit all-time high because Zuckerberg has finally announced his artificial intelligence plan, and it's called the Meta Superintelligence Labs. Remember, they've been, pump priming their entire recruitment desk. They've been hiring from a lot of the competitors, etc., paying as high as $100 million per coder for them to, join them. So let's see what, Meta has on offer when it comes to artificial intelligence. All of that, what does it mean for our markets? The start is likely to be in mild green because yesterday, we saw a decline in the frontline indices. We had the Nifty bank and the Nifty. But if you look at the broader markets, Nifty Next 50, the mid-cap index as well as the small-cap index, all of them were very well bid. And typically that happens when the street believes that maybe the frontline indices have very strong support. And that's exactly what is taking place. The good part is some of the excesses from, yesterday, going into trade yesterday, are being taken care of as well. The Nifty has to move beyond yesterday and the previous day's high of anywhere between 25,650 to 25,670, and thereafter we'll move higher. The excess is being taken out. Why do I say that? Because if you look at the India VIX, that continued to decline. Yesterday it seemed like it was, pricing in some sort of complacency. But with yesterday's consolidation, it's moved back above that 12.5 mark. So complacency is getting out of the way. And then we are seeing, some of the excesses, even in the options data, being taken out. I think Nigel will speak a lot more about that. But Rima, the global cues are largely positive.
Indeed, and Asia today is mirroring or mimicking what happened on Wall Street. But just quickly, because it's never a dull day when it comes to Donald Trump, and Donald Trump has once again taken direct aim at the Federal Reserve. In a handwritten open letter to the Fed chair, Jerome Powell, Trump accused the central bank of acting too late on rate cuts and urged them to slash interest rates by a lot. The letter was confirmed by the White House Press Secretary, Leavitt. On Truth Social, Trump went a step further, calling for rates to be at 1% or better and saying the whole board should be ashamed. But that's not all, because here's the latest on the tariff front. While even as the US-India tariffs remain a bit sensitive right now and in a critical stage, in another post, Trump has threatened a fresh tariff level on Japan, citing their refusal to import American rice. They won't take our rice, Trump said, and yet they have a massive rice shortage. He added, we'll just be sending them a letter. Well, all of this as global markets await a critical speech from Jerome Powell. He is expected to speak at the ECB Forum on Central Banking in Sinatra, Portugal. His remarks could offer cues on future rate policy, whether it comes in December or now in September, as Goldman Sachs was saying. Also on the US radar, the Senate continues to debate on the massive $3.3 trillion tax and spend proposal. Remember, the 4th July deadline is looming large. And markets on Thursday, it will be bracing for the non-farm payroll data for the month of June. But back home, the cues are more immediate. It's the start of a new month, and it's Tuesday, so we'll have the sensex weekly expiry. The auto sales numbers will start trickling in today. We've already started getting business updates from IRDA, HUDCO, and many more will flow through. In fact, I've got about 7 or 8 even IT previews, as the IT earnings will kickstart for the IT majors next week. And also watch for 3 listings today. There is Kalpataru, there is Ellenberry Industrial Gases, and even the much anticipated listing of Raymond Realty today. So it's an action-packed day 1 of 1st of July.
Well, that's right. And overnight the cues look positive, and particularly from an emerging market like India's standpoint, because you have the dollar index that continues to weaken. In fact, it's moved to the lowest we've seen in multiple years. You had Brent crude prices as well that are cooling off, and the 10-year yields as well. That's a perfect recipe, right, from an India market perspective. Well, even in yesterday's trading session, though, the Nifty went home with a cut of around 100 points. A couple of positives out there. One is we ended off the low point of the day, both the Nifty as well as the Nifty Bank. And take a look at the breadth of the market. Many portfolios by the end of trade would have actually been feeling very, very good. And it seems, there was some marginal selling from the FIs, but that's par for the course. There appears yesterday there was more unwinding of long positions, are taking some money off the table post the big run that we've seen. That's why if you look at the Nifty or the Nifty Bank as well, the open interest was lower on both of them in trade yesterday. And that's perfectly reflected in what the FIs did. On the long side, they unbound some positions close to 4,000 contracts. They continue to remain net short with 64% of their positions on the short side. And the FIs, they are net short. The clients are net long. But both of them mildly so. In the past, you've seen both of them at 2 different ends. For the time being, they are not very, very excessively net short or not excessively net long as well. So that's how, they're positioned out there. Moving to the PCR, that went dancing away to around 1.25 odd. And we pointed this out yesterday that it's moving towards the higher end of the band. Yesterday, it cooled off to around 0.8. That's one technical indicator you like, because normally the range on the downside has been 0.65 to around 0.7. So now we're closer to the bottom end of the range, which is encouraging. How did that come about? Because we had a lot of call writers, and these call writers seem to be confident yet again. 25,600 call, 25,700 call. Between them, they added closer around 1 lakh shares, and the premium out there 60 to around 100 rupees or thereabouts. Which brings us to the crucial levels you're looking at. Now, we have a bit of a resistance zone, which is at around 25,650 to around 25,750. This is going by the options data. That appears a bit of a resistance level, while the support is the earlier resistance, which was at around 25,250. In fact, the resistance zone perfectly ties in with the high that we saw yesterday. So both on the Nifty as well as the Nifty Bank, you'll want to see the Nifty get past both these 2 levels, because these are the highs that we made in yesterday's trading session. The stock that I'm looking at is Gabriel India. It's had a big run in the last few trading sessions. The street was sensing something. It's up close to around 18%. But they have done some consolidation, with the parent. And in fact, it's EPS positive. They are, going ahead and they're diversifying their product range as well. And it's EPS accretive to quite a large extent as well. Margin accretive, return ratios accretive as well. So on the back of that, I'll keep an eye on the stock, though it's already seen a big run in the last few trading sessions.
All right, Nigel, thanks a lot for that. So that's about Gabriel India and the market setup for this morning. All cues suggest that it is likely to be a good day of trade for the